GKFX presents the Market Analysis webinar.
Yes, it's that time again. Another weekly analysis video for you here, going over the market, picking out some high probability setups. My name is Dima. Welcome back to another video, another week in the markets. Hope you had a good week. Last week, we'll be going over some of the charts that we looked over together last week and looking at what happened. And of course, going over the higher probability setups for this week. And this week should be an interesting one because Wednesday is going to be some really major news. We've got the FOMC and we have the rates announcement from the USA, so on the dollar, but that will likely affect a large portion of the market because of the significance of this news that's going to come out from the Fed. So we're going to really pay attention to that. We're going to see what's going to happen. We may see some volatility come in and we may have to wait before taking any setups. We want to trade carefully here because this will affect a lot of charts, lots of currency pairs. We have some smaller news from Australia, the CPI numbers, and on Thursday again we have GDP figures, which is going to be less of an impact than the one on Wednesday, but anyway, still something to bear in mind. And on Friday we've got GDP figures from Canada as well. The other thing to bear in mind is that we are well into the summer period, end of July and also in August. Summer period is usually quieter, and it doesn't mean that we won't have volatility, but usually it is a quieter period. So you may not see the setups you might normally do in the rest of the year, but gonna have to play it by ear as it goes because there is a little bit of uncertainty, unpredictability in the world and the markets in general at the moment. So let's see what happens. We're going to analyze anyway, and we'll see where the probabilities lie, and we'll go with what the market tells us as ever. Price action is king in this case. Okay, right. So with that in the back of our mind, let's have a look what we've got this week and how we can pair up that news volatility with the setups that we've got. So again, this week I picked out 7 charts to look at, 7 possible scenarios, and let's have a look here at what we've got. So I'm going to start with Forex as usual. Let's have a look here at the Euro Yen. Right, Euro Yen, and generally I think I mentioned this on previous weeks that we had the strong, I should say very bearishness on the yen, which is why we've seen many weeks of bullishness on the cross pairs with the yen. And now we have what looks like to be a bit of a stalling and a potential turnaround across the yen pairs. Now we've got the yen here that we looked at last week as a possible continuation of that buy scenario, looking here, and this is what I marked out at a break higher, pullback, and then a continuation. And the market did do that, and then afterwards, after breaking this high, it actually failed. So with this failure here, what we may have now is a possible reversal to the downside. So we had seeing this structure fail, we now have a very strong push to the downside. So this may be the opposite scenario. So let me just delete all of these from before. And you can see that what's happened is the market has broken back down below this level right here, and I'll now be looking at it breaking this zone level right here. And we can see that Friday closed below that, and the candle of the last week also closed very bearish. So going to consider a bearish scenario here, and the market may be in its reversal phase. It's a little bit early to say, because you can see here we've previously broken a low and the market still headed higher, and here we have kind of broken a low on this weekly basis, but again this could head higher still. So in order to have a bearish scenario, well, the probabilities will be, if that's going to happen in the market, will be a push further down, lower, breaking this level right here. Let me just remove this zone. I'll place it at a more accurate level here just to clean it up. So another push down would confirm that bearishness. So I'd like to see the market break below another structural low. So we've got a structural low right here, as you can see, that wick, and another one right here. So another nice push down and a pull back up into this zone. That's where the better price would lie to continue to the downside. And if that does not happen and we actually move higher, then a move higher would invalidate this bearish scenario, and that move higher would be a break of this level right here, in which case a pullback and a lower price would mean then that would look to have an entry right there, so pushing higher still. So at this moment in time it's not very certain, but the fact that it's coming back and going below this zone right here, this level, indicates some weakness. So let's see where the market wants to go. The probabilities are not in our favor as it stands at the moment, in this very moment before the market open, as I'm looking at it here. So let's see which way it actually goes. Yeah, so wait for that confirmation where the market wants to go, and then look to find an entry at a good price to increase the probabilities. So that's the euro yen. It's a bit of a tricky one, this one. I would say that the quality of the setup is perhaps not the usual quality that I personally would like. Everybody has their own criteria, but it's really good to see the market break several more structures lower just before we really get a very strong indication that the market does want to head lower and the yen is perhaps bouncing back up a bit. If you want to have a more indication, then you might want to have a look at the other yen pairs and see if the same thing is happening, and if there is a disparity between them and they are heading higher, whereas euro yen is heading lower, then you might want to be careful. They should all be sort of moving in sync for the probabilities to stack up. So that's a little tip there. So that's the euro yen. All right, let me go now to EURCAD. And I'm going to have a look at the weekly. We have the weekly chart on last week, slightly bullish. If I look on the daily, Friday's candle closed very bullish. We left this very big rejection area, rejection zone. And if I look at the beginning of the week, what I marked out was a break higher, expecting the market to go to these levels, which it has broken right through this one, and it hasn't quite hit the one above. So what happened here is I was looking for a possible pullback and a bounce. However, we didn't have any price action, and then the market went lower still. Now, the other scenario played out was a pullback into this zone right here, which would have been a better price, and that we did actually have that at the end of the week. And the end of the week, if you look on the news we had on Thursday and then continuing to Friday, Thursday's news was the actual trigger point, the bit that created all this volatility in the market, and then that's when we hit that level and bounced right off. And if you look a little bit closer, so we hit that nice price point. Well done if you got in. If not, then you may have another chance here. So let's look at where that is. Remember that ultimately on the higher time frame, I'm looking to at this level right here to be hit, which we didn't. We just missed that. So we may be going into that level, into next week. Let's see if that's the case. So we did bounce off this zone right here as expected, went higher, pushed right higher, and very, very cleanly moved away from that without any hesitation, breaking this structure right here, which would indicate a confirmation that we are now going higher. So with that, the next thing that I would look for is either a push higher, come back down to a level, and then a continuation into this level right here, which would be a smallish trade. You'd really have to manage your risk, or going down into the lower time frame. There's another possibility to go a bit lower, and then getting a lower price obviously would be good, because we looked at the move starting right here, so anywhere below would be great. Moving up to that level that I'm looking for. Let's see if the market does that. We may have more consolidation, I don't know, but the price action will tell us. I like this level right here. Can also, if you like, let's just minimize this. This one we don't need, we just confirm that. And if I draw out this level right here, that'll be a nice rejection level to go off of. So that's what I'm looking at on the EURCAD, a short-term possible buy scenario. I'm seeing this as the higher probability case, and on the long term, obviously that's another picture. We've got the bearish bias right here. You very clearly see that. But on this short term, with this market ranging and now having reversed off this nice cheap price right here and this zone, I'm looking for higher prices, at least in a short-term trade. So this is not a classic type of going with the flow of the market. This is a bit more complex, making use of the pullback. And if we go above this, then you may want to, there's the option, of course, depending on how you manage the trade, to leave the trade running for a bit or leave a partial running, depending on your strategy, or just take the full amount off at this level. So that's the higher probability scenario I'm seeing on the EURCAD. Let me move on to the next Forex pair. So we've got one more here, the Pound Aussie. What can we see on the Pound Aussie, right? So I'm going to start here on the monthly, because the monthly, the higher time frame monthly, gives a slightly better picture here. We've seen this big move down that I looked at in previous weeks, and I was expecting a continuation of that after a pullback. And what's happened here is that the market has created this pin bar and failed to go higher. We've had this whole sort of indecision point right here, and just been ranging within this zone right here for quite some time. It's been a few months really, hasn't it? Looking on the weekly, you can see that range in more detail. And if I draw a line where there's a level right here, you can see that the market has bounced off it, but actually hasn't made any meaningful progress after bouncing off. And in fact, what we've got now is this break of this low right here, which indicates further weakness. It's a sort of dead cat bounce, isn't it? No price action, no movement higher here, which indicates a further weakness. And that further weakness means that I'll be looking for the market to go down into the level it bounced off from, and in fact perhaps even breaking that level. So with that, you can also see that the previous week has closed bearish, and each week, the previous 2 weeks before that, closed bearish as well. So clearly a bearish scenario here. With that in mind, with that little bias here, what am I going to look for next? Well, of course, I'm going to look for a better price. I'm going to look for a place to get in on. So I'm going to draw a fib from the last obvious high, which is here, to the last low. And I'm going to look at the 61.8 and possibly 78. That is my personal high probability scenario. So I'm going to mark out that zone where I would like the high probability entry. Everyone has their own, but of course, the higher the price in this case, the better, the higher the probability, better price to sell from, because it is a much better price. And then you've got a bigger risk reward. Nice move down into this level and possibly lower, depending on how weak the market will really go, of course. That is the scenario for pound Aussie here. And of course, I'd always like to see price action, more favorable price action, to show a reversal in order to put the probabilities in our favor. So that's the pound Aussie. Gonna zoom out again. Let's minimize that. And let's go to the next one. Right, next on the list is gold. And as ever, you can see that I've got similar charts to the previous weeks. We've been following some of the same charts. It's a good thing, good bit of continuity to follow the markets, go along with them and see how things progress. So if you're interested to know how the markets have gone on and how we fared in last week's, you can probably have a look at a few of the previous week's videos and see the progression of the market. Right, let's look at gold. So I remember last week we did look at this level and this trend line. I did talk about the fact that we may see some uncertainty here. It's a bit unpredictable because we are at this trend line, so we may see a bounce or we may see further capitulation. Now that we are at this trend line, we've got a bit more price action here. We've got a bit more information. The market has really revealed its hand here and shown us what it is intending to do based on the information it's given us here. So this is what we looked at last week. I looked at a possible rejection of this zone here, and we didn't quite hit it, and the market went lower and closer down into that higher time frame trend line. If I just go on the daily, maybe the weekly would be a better picture to show you where I drew that trend line from. We've got that brief bounce off that trend line now. Again, you can see that right here, the market took out all these people who tried to buy. It went lower, enticed more people into the short, and completely ran away from that level without hitting the zone that we were looking at. So that was no trade there because it didn't go into the optimal level and the place of entry. So I'm gonna leave that out. I'm gonna delete. Let's just delete this. What am I going to look for next? Well, I see that with this rejection, the market has broken these low structures. So we've got a structure here that was broken. Got a structure here that was broken. So now that the market is showing bullishness because it is breaking higher and is doing that with momentum, with very clear price action, bullish candles, then I'm looking for that continuation of a push higher. If I go zoom out to the daily, I can draw a fib from the last obvious high to the low. And once again, I can look at the 61.8 and the 78 as a possible target. And I would expect that the market will break these structures. I've got another next structure to break. If I go down into the chart, I've got a next structure right here that obviously sticks out. And I've got, what else can you see? You probably see it, it's more obvious now. The next one will be right here. If you look left, got a structure here, so I would look at that as the next possible target. Now, to get an entry, obviously, as I said before, keep mentioning this, and it's important to get a good entry. The better price would be down here. I would like a much nicer price before heading to those structural highs that I pointed out. And any lower price would be a higher probability price to buy from, because It's a nice low price. There's no guarantee that we're going to do that. The market may straight up higher, but of course, if that's the case, then the probabilities reduce and you're not going to get a very good risk to reward trade. You may need to go down to the lower time frames to see what's happening and get a better reading. So any lower price is good. I also see a level right here. So if the market doesn't head down to this zone, we may head down into the zone right here. So I'll put that as a possible scenario. And I'll also put down this as a possible scenario. Again, the price action will tell us what to do. It'll be more clear from there, and we'll see where the actual reversal comes in at. And if it doesn't, then it doesn't. Again, we'll have to miss it out. So be it. So that's gold, and this also correlates, as Eva mentioned this in the previous weeks, correlates with the bearishness of the dollar from last week. We saw continued bearishness, which would, in theory, drive gold higher. It's the reverse correlation. So that's gold for you here. All right, I'll go on to the next one. Let's look at oil. Oil has been a favorite of ours in the last few weeks, so let's keep looking at it. Right, previous week we've ended up with an indecision candle, doji, and let's have a look on the lower time frame. I did mark this out as a potential channel, as just to point out the obvious downtrend. I did mark this zone as well as a possible reversal area, and if you took that, you can see we broke this candle right here, broke this structure and this structure, and it looks like we are heading lower. And I did mark this out, these scenarios right here, if that's what happens. And indeed, that's what has happened. We went to the downside. So let me just delete these lines here. I can delete this fib here as well. This part right here, this structure right here wasn't broken. We went to the downside, pulled back, and now we're in the middle of that drop. So if you're in this trade, then I don't know if you continue to be in this trade over the weekend, but we're now in this sort of pullback, and then we're in this range. So it's looking like there's a bit of uncertainty. I'm not sure if the market is heading higher or lower. It's going to continue on its bearishness or break and create new structures. So what to do here? In this case, in this bit of uncertainty, it's not very clear, but seen as we're in this bearish, slightly bearish scenario, or I would say more bearish than a possible reversal still. No clear candles showing reversal of the market. We did leave these wicks right here. So if you're not already in this, the high probability setup that I would look for personally is a break of more structures, which would be right here as an obvious one, and then break below. I'll break below that, and then a nice better price down further lower into where would be the next point. Well, we could see this structure right here. That will be the next place. That's where I'd look for the market to reach to. And yeah, that's for the next trade as the next possible opportunity. The way that I would invalidate this setup is if we actually broke above this high right here, and then possibly we may see market break higher and then move into further breaks of structures to the left and then go higher. But at the moment we're still on the bearish side, particularly on the higher time frame, with these daily candles pushing lower and especially weekly candles pushing lower. And looking at the monthly, again, we may be in a middle of this retracement, even though we're on a higher time frame bullishness on oil. So keeping that in mind, keeping these scenarios in mind, we've got the high time frame, the big picture, and then we've got the lower time frame pictures that we're looking at for trading. Okay, so that's what I'm seeing on oil. Let's see where the market heads from here. If you already had an entry from higher up, then that's great. That's probably a one to keep and see what happens. And if not, then let's see what the next scenario plays out and how oil moves if it wants to indeed go lower or break higher. This whole range here, right here, you can see perhaps this little range right here is a bit indecisive. We haven't had any not the cleanest breaks lower. We had these wicks, so let's see how it goes in the next week, particularly with the rates and what's going on in the world right now politically. We may see a bit of volatility on oil and a bit of indecision before it decides where it wants to go. So that's just as a heads up for you. Right, next, move on to indices, to S&P. You may remember this one if you were with me the last week and the week before that. When I was looking at this zone here for the market to reach to. We did head higher into that. Eventually we now broke, and we haven't quite reached this zone yet, but we are edging, just inching towards it. I'm going to delete these lines for now, just to clear it up a bit. Just move this for a second. So now we are reaching very close into there. Now from here it would be a bit risky to buy because we are so close to that zone where we may get a reversal. So it may not be the best place to buy, but a better place to buy would obviously be a cheaper price. So now now that we've broken through this level, I draw a level right here, like so. What I would look for is a better price, which would be down here, and from here would be a higher probability scenario to buy from, because up here we have a high price. We're in the middle of a retracement. We retrace this whole move right here. We are now deep into the retracement, so the higher up we go in the retracement, they lower the probability because we got a bigger chance of a reversal on the higher time frame. So then if I was going to go for a buy, I was to look at this zone, and then the interesting zone would be right here in terms of a reversal. So I'm going to see if that happens. Again, remembering the Fed funds rate that's going to come out this week on Wednesday. That's going to be the real interesting moment, and no doubt we'll see, very likely, that we're going to see some volatility in the markets, including the S&P. So let's watch out for that. The safest bet, to be honest with you, would be just to sit it out, because the market may do some funny things, and we want to really go with the safe options, the high probability options. So let's see if that's the case. First of all, let the news play out if the price action here is not clear. So real proper disclaimer, word of caution here, remembering the news. Really bear that in mind, I would say. So that's that on the S&P. Let's just go finally to Bitcoin, as we have done in previous weeks. So what have we got on Bitcoin? Well, we've closed a bit bullish last week, didn't we, compared to the week before that? And we did talk about Bitcoin last week, and this was the beginning. Spoke about the breakout of this range, which we have happened, and a pullback, and then a continuation, which is what it's kind of happening right here. And the week closed on the level back down where it bounced from. So where to from here? That's the question. So I've got that marked out to go into this zone, and then possibly the next zone right here as the next take profit point. Where do we go from here is the question. Well, let me delete it, clean up the chart. Still looking at a higher price. So why is that? Because if I draw the fib from the last high to major low, we haven't even reached the 50% point and let alone the 61.8. So really still expecting higher prices because of that. Now if I draw out a zone right here of where we're at, what we want to see is market drop, or on the zone here, somewhere around here, possibly even lower. If it drops, we want to see it close back up higher, push higher, close above, then I'd look for a better price, possible lower price, some kind of pullback, and then a continuation to the upside, and then possibly further into the next level. At the moment, we've kind of got ourselves stuck in this sort of range, so not as clear is it. It'd be nice to see a nice push higher. In this case, on this push, we saw this wick which indicated a little sort of peak, a little clue that we may not be pushing very high. You can see this candle compared to this very bullish candle wasn't that big, especially compared to this one here. So we really want to see very, very nice bullish candles off this area here, moving higher, breaking this structure point right here, especially confirming that bullishness. And yeah, we want to see that momentum, real strong momentum to the upside. And then we'll have that bullish scenario, and I'll be favoring a higher probability scenario of buying, looking for a better price. That will be the what I'll be looking at as a more favorable scenario. So yeah, that's what I'm looking at on Bitcoin here. Hope that has helped you with those charts. Again, I'm going to stress again, I know I'm going to keep parroting on about it, but the summer months, just again to remind you, the fact we've got summer months, the fact that we've got some major news coming out, one of the biggest news perhaps of the year, the funds rate from the US, and that will likely induce a bit of action and funny price action in the market. Or what will happen is we may get some ranging movement and a bit of uncertainty while the market sorts itself out. So be aware of that. Yeah, manage your risk as always, and trade well, trade carefully, and hope these setups help you to look at the market in a clearer way. So as ever, my name's Dima. Thank you very much for joining me. Hope to see you next week and we'll review next week what happened. We'll have a look at how the market fared out, and no doubt we'll have some more setups as always. So don't chase the market, no fear of missing out. There'll always be another opportunity, another bus, another train coming. So if you're unsure, the setup is not clear, wait for the market to tell you what it wants to do. So thank you for joining me, and see you on the next one. All right, bye for now.